All right, Bruce here from Targeted Wealth and Creation. Sorry, I left that out. I had another thought in my mind. I'm here today to talk to you about being, I wouldn't call it stuck. Did you ever get that stock where you're just in a trading range and you're watching it go between, take Tesla and you're watching it go between 160, 180 or 175, 190, and it's just trading and trading in that period, and you're like, could you break out, please? So let's talk about that a little bit. I have some strategies for you. So I titled this thing, How to Turn Your Tesla Shares into a Cash Machine. Greater than 55% annualized yield income. All right, so let's talk about that. This is a video discuss people who hold Tesla shares, right? I will admit, I see it first and foremost to its chart. I honestly, I've always known what it was. It came from the tech industry. I retired. I thought of it, oh, that's a computer on wheels. It's not really a car. And I saw the success it had, never really bought it. Then when I saw how high it went up, I didn't want to touch it, right? Someone who spent 35 years looking at charts and investments and trying to find timings, and I look for sectors where things are undervalued. I just said, nah, not interested. It had a 20x, which is not uncommon in a phenomenal tech rise. I mean, it went from 2019 to the low to the 2021 high. It 20x'd, right? So in the 2000 decade, I retired investing in gold and silver and precious metals right after the dot-com bust. So the NASDAQ went from 5,000 to 1,500. And I said, what's going to do good? Well, it was a time where commodities soared. So I got into gold. I figured out the stocks and when they were undervalued and when they were going to run and which metal was in deficit. And so my point here is there's a lot of things you can learn about timing. You can pick the same stock and you can pick it when it's going into a downdraft and lose 4x, which is exactly what Tesla did after it topped of a 20x. It went down 1/4. It went from 400 to 100. So if you saw it and said, I want in, which a lot of retailers FOMO into it at the top, and then they're caught down at 150, they're depressed. They're like, well, I need to sell it. It's just going to go down further. When's it ever going to stop? And they sell out. I mean, it's very common, and smart money and big money is, they're the insiders. They're all selling at 350 and 400. They're all unloading their $2 and $5 stocks, thinking, they don't know the exact top, but they know when too good is too good. So here's where I'm going with this. And let me tell you what my feelings are. After watching the shareholders meeting, I'm as optimistic as I've ever been on Tesla, and I didn't want to touch it for a long time. So no one can deny that Elon Musk, love him or hate him, the left loved him before he wanted to go buy X and didn't want to allow them to use the platform the way they were using it. The leftists loved him because he was electric and not gas, and it was green. But people are fickle; they change. But he's a genius. You can't deny that. So after watching his recent shareholder meeting, I came to the following conclusion. He's loaded for success in the future. You just look at his robots. You look at his robotics. You look at his, single frame. You look at what he's doing with the manufacturing process. And he's got futuristic technology. Amazon, if you go to some of the Amazon fulfillment centers, I have some friends that work in IT there that I used to work with. And they're selling the cloud services. A lot of people don't even know that aspect of Amazon. They only think of Amazon as the retail, which is obviously, and I'll tell you where the money is really coming in the ensuing quarters is in the ads. The ads that are running on the Amazon pages, right? That's money that's just going to flow in, sort of free cash flow. That's really going to help Amazon. But so he's loaded for success in the future with his robots. And, they're world class, perhaps world leading. Let's look at Boston Dynamics. And I think he's surpassed a lot of what's out there. China's trying to knock them off, but look at their hand motion. They're still behind. So he's got the engineering genius, he's got the business acumen, he's got a proven track record of success across many companies. Now, he's also optimistic. He's not afraid of hard work, sometimes overly optimistic. Yeah, he's taken on many other endeavors. So if someone wanted to give him a fault, you could say, hey, he should be more focused. You can't run this many entities. Starlink, it goes on and on and on, the space shuttle stuff and just anything and everything. But what he's doing with robotics and AI and the supercomputer, et cetera, they're world leading. His car is not a car. It will be a robo-taxi. It will be, hey, I want to loan out the cycles of the computer in my car to somebody for Bitcoin mining or some other use. You're talking about efficiencies of scale. You're not driving the car. It drives itself. Let it go down and join the robo-taxi that Tesla's managing. And yeah, it might not be tomorrow. It might not be next year. But it's coming. The guy is I see a misspelling. I'm confident. Sorry. So I'm confident he will accomplish most all and have amazing success. So being a technical and a fundamental guy, when I analyze companies and charts and all the rest, his robotics alone, and you heard it from him, this could be a 25 trillion opportunity. By the way, do you guys know what a trillion is? I'll tell you this. I did this once before, and I heard it, and I was amazed, and I looked it all up. So if you've got, and I forget the exact numbers now, but if you think about it in seconds, right? So what is 1,000, right? 1,000 seconds is, I forgot, divide it by 60, and you figure out it's not very long, right? And then you say, okay, what's 1,000 thousands? That's a million. And then what's a million seconds? Well, I don't know, 9 days. I don't remember the math. I could do it here in the spreadsheet. And then you say, okay, how much is a billion? Well, it's 1,000 millions, right? Well, how much is a billion in time, right? So if you had 1 billion seconds, how many seconds is that in time? Well, that's 31.9 or 31.7 years. So what's 1 trillion seconds? Way more. It's back when the cavemen were roaming the earth and there was no fire even. So it just gives you the scale that involves, 1 million, 1 billion, and 1 trillion. So it's significant, right? We talk about these 3 trillion market cap companies, right? Apple, NVIDIA, and they're all battling it out in that space for who's the biggest. One overtakes the other. So it's huge. You look at the U.S. and you look at a 19 trillion annual deficit and a total deficit. When it gets into the trillions, people lose perspective. So I love that time analogy. And go out on Wikipedia or something, and you'll see everything I told you with more detail. So in my humble opinion, this stock is going to reflect all of that in due time. So let's dive into that. How long? Let's discuss it. That's why I put out this video, to give you some insight. And listen, the people that are watching this that know Tesla probably know everything I said and a few other things. But I'm just trying to touch on some of the things that I find exciting. And then I'm going to apply some of my technical analysis. We've talked about fundamental. So here's a chart that was in Trading View. Somebody put it up. I just cut a piece of it out. You talk about a support line, right? So this was back in April. So we can fast forward to June. This chart over here is, even though it says June 16th because I did a multi-year, this was really done today, on June 20th. But the idea is that I don't know why they do that when you use big charts that show 616, but it's really done today. But it doesn't matter because it's probably showing it like on a weekly basis because I'm doing since, multi-year. But what do you see here? Not only do we see that same support line, but we see a triangle. And this symmetrical triangle, which means you have a high, and then you have lows coming down. The lows get consistent when they hit the resistance line. And on this end, it's symmetrical because they're both going at a similar angle, right? You have ascending and descending, and some of them mean bullish and some of them mean bearish. This means either, right? So it's a continuation pattern. Typically, you're going to break down from here fairly substantially, or you're going to break up fairly substantially. So a lot of the Elliott wave guys that I also follow, but I can look at a chart and I can see patterns. So when I was doing this, I just jumped in here and drew a symmetrical triangle. So we're sitting here in the 180s right now, and until we get up to, just by looking on that, it's probably 225. We need to break that resistance. And a lot of times it'll break it, it'll move up, and it'll come back and retest that support line and then continue up. Not always. It just, sometimes it does. And on the breakdown, and you also can have a false breakout. If you run up to 240, and then the next day you drop back and touch the line and then drop below, you've unconfirmed that breakout. It's a false breakout. Same thing on a breakdown. You go down below this line 5, 10, 15 points, and you go right back. And a lot of times it'll do that. It'll come back and it'll test that support line up around, depends on where you are on the chart, because this triangle is going to continue, right, till it gets an apex. And it doesn't mean it won't break out. It could break out in a week. It could break out in 2 weeks. It could continue like this for 4 months, some period of time, 6 months even. So that's the crux of what I'm trying to talk to you about. While I'm bullish and I jumped into some, I also bought an income fund, right? And I'll talk to you about that. So obvious that Tesla's experienced very large impulse waves up to 20x. I've covered that. And it's covered the down legs, right? From 400 to 100. That's not fun. So if you bought this stock at 300, you're not happy when it went to 100. And you probably sold in here somewhere and said, well, it could go down to 50. So, and it could have, right? But it's starting to establish a pattern that if it breaks this, it's probably going to go minimum 100, likely 80, and probably the low's 50. But on the upside, we're talking big numbers. I've got a wave pattern measuring up. Now, it's going to take some time, 680 to 715. All right? And you're going to have resistance. There's going to be various resistance, like right here. This 300, this 315, that's going to be strong resistance if it breaks here. And it's probably going to, just consolidate. So nothing happens, but I'll tell you, based on the fundamentals of me personally and seeing what they're doing and knowing Elon and say, we don't have a market crash, which I believe that we could pull back 20% in the indexes at any time going forward, but I don't see a 1929 scenario at all. You make headlines when you say so-and-so predicts, a crash worse than 29. Hey, maybe it happened. I don't think so. So I see this upper resistance. I see these probabilities, right, on all this stuff. But I'm still right back to the point, this could be a 6-month consolidation. So I'm saying, that brings me to discussion. What I see is an opportunity to make some income on your Tesla shares while you wait. So cash out some Tesla. I don't want to get rid of any of my Tesla, And other people said, I never want to own it again, right? But let's say you're still loaded up and you're waiting. Well, you're going to wait a while. The longer it waits, the more energy it builds to go to 600 or 700. But it's going to take a while. So, you can make 50+%. I even say a significant yield of 45 to 50. I really should have 50 plus. I just did the calculation when I was building this. On a stock that mimics Tesla called TSLY. Well, what the heck is TSLY? Somebody's going to know, and I'll tell you later about some haters and what they likely went through, why they hate it, blah, blah, blah. But I'll tell you about it. So it's an inexpensive $15-ish stock that pays monthly while you hold it. And it absolutely mimics Tesla. I'll tell you the upside, the downside, when it performs better, when it doesn't, what you can expect. And then you make a decision later. This is just for education, right? I'm not a financial analyst. I'm just a guy who knows a lot about options, who's found an option strategy ETF with various funds, and I use those to my advantage to make a lot of money on my money. So, and I produce content that explains to the average guy how they do it and what they're doing every single day to collect that income weekly to then generate that payment on a monthly basis. So that's sort of my forte, and I'm looking for people to become aware of things out there that they may not know. So I went out, and this is all public. You can go out to YieldMax, just Google YieldMax ETFs. Website's going to come up. They're going to show you there are 23 funds. 3 of them are funds of funds. They're like an ETF with all kinds of stocks in them. One of them is all the other single stock funds. One of them is the Magnificent Seven, the Google, the Amazon, the Tesla, the NVIDIA, the Microsoft, Facebook, Meta. So it's those big giant companies, and it's a mutual fund of just them. But you can buy all those individually, just like you can buy TSLA individually. So here's the last, what did I capture? 3, 6, oh, actually, yeah. So I captured 3, 6, 8, 9 payments. So I went back and said, what is TSLA paying every month? And there they are. You can look it up. It's on their website. Anybody that owns it can verify it. $1.15, $1.16, $1.20, $1.13, 80, 81, 68, 69, 64. And I said, okay, it all adds up to $8.28 if you own that TSLA. And that's 92 cents a month. And if you had 1,000 shares, you've been compensated. Oh, it's because it's 828. It's 8282, right? Because this has another decimal place I'm not showing you. Because a lot of the payments are 3- and 4-digit payments. Like this one is rounded. So I went out and I said, okay, oh yeah, but it doesn't mimic. I heard that it has 100% the downside and it only has 15% the upside. Again, half-truths. I'll go into that later. Absolutely not true. Okay? So let's take a real-world example. And then you can go look up your own and figure it out. But I took one. Just grabbed one. So I said, if you bought TSLA on September the 26th, and I didn't even figure out where it is here on the map, you know, it's probably 280, 300. I really would have to go in and figure that out. But it had some more downdraft to go, right? And well, actually, it's showing here on September 26th that it was 242.98 that it closed at. So I took that 1,000 shares, and then I said, okay, what is it at today's price? Well, it's 181.57. So if that was your entry into Tesla, you are down 25.27%, right? And you lost 61,000 if you spent, 1,000 times 244. And so I did that math and said, you're down this. What is it a percentage of your total investment? Well, you lost 20. Again, is it a complete loss? No, because it's a paper loss if you're holding Tesla. So let's go see if you did that same thing with TSLA, because there's always people that tell you half-truths. So I looked it up, and TSLA on that same September 26th could have bought it for $26.10. Where is it today? It's trading at $15.44. So that 1,000 shares costs me 26,100 minus 15,440. So I lost 10,660. Oh, wow. I lost 40%. So it didn't perform as well as Tesla. Okay? But you left out the $8.20 that it paid out. So when I add that back in, what was my loss? I lost $9.05, and that's in a down market. So it's possible to lag the upside if Tesla goes up 80% in 6 months. You're probably going to have a 50% upside in Tesla. But you're also going to have another 50% in income that you can do things with. You can buy other stocks, you can spend, right? But it's real money, and you've had the use of that money for that period of time. So my argument is typically it outperforms Tesla, but it doesn't in a pure outperformance. If Tesla triples in 6 months, this fund is probably going to go up 120%. So you significantly lagged the performance, right? 300%, 120%. But now add your 60 or 70% yield, 80, because it's paying bigger yields because it's roaring up. But still, you only get to 200 and it's at 300. There are times in super bullish periods, but I would say to you, why don't you go out and buy a 2X ETF that holds Tesla? Why are you holding just Tesla? Right? I mean, there's an argument for everything, because I do those kind of things when I see the opportunities, because I study the charts and I say it's in a wave 3 of 3. It's very likely to really take off. But I'm not trying to tell you to be a trader. I'm just trying to teach you why people say half-truths about this. Oh, it can only go up, it's capped at 15%. That's on a weekly basis. So if Tesla is going up 5-10% a week, then as long as these weekly calls are written out at 10%, you're going to track pretty close to it, and your synthetics or your matched other options are going to go up the same. It's only when it runs 30% in a week and they roll calls out 15%, then you got to buy them back at a loss, but you made some money on the synthetic, so you can't match Tesla's performance. So guys, I don't mean to get too technical, but I like to teach you the truths and not have some jaded guy who watched his Tesla go down and reverse split and is all angry. Now that fund's a scam, and they don't, they're just returning your capital. They're crooks. You don't say that about the Tesla stock that you bought, which it would have done worse. You wouldn't have had any income. So that's all I'm saying. There is some truth to it, can lag in a super performance time. But do you want income? So in my opinion, my humble opinion, the people can have some of the Tesla in their portfolio, especially if they're bullish. But I'll tell you this, in a flat to a slightly down environment, we will outperform. And if you listen to the half-truth guys, they'll say they have 100% of the downside. Absolutely not true. If it goes down 1%, 2% every week, well, that's what Tesla went down. We don't end up going down anything because we're collecting all those 5 and 10% out weekly calls. They expire worthless. So we got all that income to offset, the down. Maybe we went down 1% and Tesla went down 2%. And that can happen week after week, and we're collecting income. So sorry to just go on my tirades, but it just annoys me when someone's bitter and then some other guy tells them, well, here's why, they're capped and it has 100%, and it's just not true. So anyway, let me wrap up for you guys. I don't want to make this too long. So I took a 3-month average, right? So here's factual, right? You could do a different one and you might get a slightly different, advantageous for Tesla. I could do another one and it would have more advantageous for Tesla. But your 3-month average, if you go back here, right, it's been paying in the mid-60s to the high 60s, 68. So I said, okay, the average of that 67, 3-month average. And I multiplied it times you buying it at 1544. And that, if it continued, you're going to get a 52.29%. Well, if it stays in this tight trading range, you're not going to make 52% on Tesla. Yeah, somebody's going to say, I write covered calls. Okay, maybe you are, you know, and you can make some on that. But are you as adept that a fund that does synthetics and does, you know, weekend niggly calls? This isn't your grandma's covered call ETF. Go look at covered call ETFs and look at yield max on their return. I mean, they're lowest, you know, at JPM or, you know, JP Morgan and some of the real, you know, just, you know, pretty much vanilla milk toast and volatility funds are returning 25% annual yield. So the minute you have some volatility, I mean, if Tesla gets going, that yield is going to go back to 80 or 90%, right? So your payouts are going to start going over $1 and back to some of the periods where they were here. It's only because the stock had been going down that the yield started going down. Okay, so that's what I got. I'm going to wrap up here. So here's my summary. There's a place in all portfolios for yield max ETFs. Yield max now even has, and it's their first one, they're going to have many more on other single stocks, an inverse bearish TSLA. So you make more income. You always make an income, but you make more income if TSLA or Tesla goes down, and that fund is called CRSH. We laughingly call it crash, right? Some people call it crush. I call it crash because I love the little humor there. So it pays a nice dividend also. I think it was a $20. All yield max funds come out at $20 and then go from there up and down. And it paid 95 cents in its first distribution. But I kind of favor the bull market right now, but honestly, you could go buy both of those in a flat market and they both will pay you. And you won't see much NAV movement either way. The issue becomes if Tesla starts a bull breakout and moves up 30%, then your crash is going to very much underperform. So if you're 50-50, you want to flip your percentage and you want to probably be 80-20. You want some insurance on the 20 and 80% of the money that you want in a yielding, right? You go 80 bull and Tesla and 20 and crash, and then you maintain some in your own, you know, Tesla shares. There's nothing wrong with that. I'm just saying there's a place in the portfolio. So anyway, a lot of this other stuff is all I've already covered, or all about how, trust me, the minute you tell your neighbor or somebody, and this is the first time you've heard of TSLA, they're going to go, oh, my friend, he said they're crooks, and they're this, and they're that, and they're going to repeat. Well, it only has 15% of the upside, and it's 100% of the downside, and they're both just simply not true. I report on this stuff. I track all the funds. I can show you, right? So, again, if you like income and you're bored with your shares for now, take a piece of it. Come over and try. There's nothing in it for me. I mean, I hope you watch my channel and see interesting ways to increase earnings and make money and how to buy and sell stocks and how to use puts to buy stocks you want to buy on discounts. I do all kinds of things, but there's nothing in it for me from yield max. So that's all I got to say. Again, this is Bruce. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment, and I hope you're entertained. All right, see ya. Bye.